Welcome to session 8 of the Recruitment Business Accelerator program, Financial Management. In this session, we're going to talk about some of the most important aspects of financial management to run and build a profitable recruitment company. Obviously, this is a very big topic, but I'm going to try and give you a summary of some of the most important factors I've learned over the years running recruitment businesses and consulting to recruitment companies. Generally, by default, most great recruiters are quite poor at financial management. This is because great recruiters are more sales driven, they're more people driven, and normally attention to detail is something that they're not so good at. That's why accountants are very good at what they do, because they have a lot more attention to detail, and accountants are not necessarily great at the sales process because the two skills are very polar opposite in terms of ability. The people that have the best attention to detail but are also good at the interpersonal and more extroverted sales skills end up being very strong leaders, because they can perform both those and be very successful in the way that they are able to interact with people and with the detail required to run a successful business. So the point here is that if you're not really strong at financial management and you tend to push it on the back burner and don't necessarily look at your financials very often, and don't have a budget and don't have good accounting or financial advice, then this is an important business improvement action for you to do. To get a handle on the very basics, to know how to look at a profit and loss statement, to know how to read a balance sheet, and to know what your numbers mean. We've got some great accounting packages these days that make it very, very easy to account for a business's performance, and they generate reports that are really quite easy to read. So spend some time. There's plenty of great YouTube videos out there on understanding financial statements, and spend some time so that you really understand how your business is performing, because it's so dangerous to keep going and just barely look at what your bank balance looks like as an indicator of the performance of your business, because you will get hit by some serious surprises. And the more you understand about financial performance, the more you're able to tweak what you're doing so that you can further improve the performance of your business. All right, revenue versus profit, which is more important? A lot of companies measure their success by the size of their revenues, but this is actually a myth, because total revenue has no bearing on the performance of a business. It's the profitability, this is an obvious statement, but it's the profitability of a business that's most important. We see some very large companies out there generating millions and millions of dollars of revenue, and then you see that they're making $8 million in profit. But when you divide that total profit by what their revenue is, you might see a profit margin of only 1 or 2%, which really is not a great return on performance. Think of all the resources and energy gone to generate that revenue for such a small profit margin. It's barely worth it. And the big danger is if there's a market downturn, that very small profit margin can easily turn into a loss, which needs to be funded. Otherwise, dramatic cost cutting needs to occur. And that's why in a downturn, we always see very large companies with low profit margins. The first thing they do is shed people. They get rid of people because that's the quickest way to reduce cost. And as you probably know, people are the biggest cost usually of a company, then followed by rent, which is something that normally you can't do too much about because it's fixed, and often companies are on longer term leases, but people can be removed really quickly to reduce costs. But that can be really bad in terms of false economy, because it means service levels will drop, morale will drop, and the ability of the company to perform by default is going to fall when people are removed, because those people were contributing to the revenue generation, whether it was profitable or not. So during this session, you'll find in your workbook some ideas for you to really think about how you focus on important financial indicators. And these are the ones that I used to use the most. And the most important one, as we just alluded to, is profitability. And I think if you have a goal of a profit margin of 25% or more, that's a really good target for you in a performing recruitment company. If it drops below that, then you've got a performance issue, which is usually around consultant performance, or your cost base is way too high for the revenues that you generate. So profit margin is simply your net profit before tax, that is, divided by your total revenues after the cost of salaries for temps, for example. So it's your net profit divided by your net revenue gives you your profit margin, obviously. And always aim to have that to 25%. 30% is really good as well. And then you've got a really good return on investment. And there's not many other forms of investment these days that can return that sort of level of profitability and performance. That's why recruitment companies, it's not necessarily a well-kept secret, but a well-run recruitment company is very, very high performing and a great investment of your time and your efforts. I think temp and contract margins need to be kept well in check. 20% is a good benchmark as a minimum for temp and contract margins. Obviously, they'll fall a little bit under preferred supplier agreements and under volume recruitment arrangements, and sometimes you will make exceptions around those margins because it might be a strategically beneficial client that gives you a lot of additional perm recruitment business, and perm recruitment is highly profitable. Perm is extremely profitable because the overheads are relatively much lower, whereas temp and contract require a lot more work, and those margins tend to be quite a bit lower because you've got a lot of costs to come out of the margins that you do charge. So a good balance of obviously temp, contract and permanent is really important. And I've attached an article to this particular session talking about how temp margins can actually be destroying the recruitment business if the full cost of what it takes to deliver that temp recruitment service is not taken into account, and that actually to have a strong perm business is much better if you can maintain strong recurring client relationships and then complement it with some recurring revenue streams that are brought to you by temp and contract. The other important benchmark to look at is average consultant billings, and the performance of your consultants is everything. And they're your biggest cost generally, outside rent of course, but once your team gets bigger, your consultant costs or your staffing costs will way outstrip your other fixed costs. And so looking at a rule of thumb is 300K minimum is where you want all your recruitment consultants. Obviously, some are coming up to speed because they're new to the industry, or they're juniors, or they've just joined. But that's a really good average to look at, and I don't see many recruitment companies have a calculation of their average consultant performance and review it every month, because you'll be really surprised, and you'll see that if your net profit margin is not 25% or higher, it's generally because your average consultant billings are way below the 300K mark. So that's why all the effort you can put into consultant performance, and we spent 2 sessions in this program on staffing, and it's why it's so important, and it is the critical performance factor of a high-performing recruitment company. Debtors are important to look at. This is clients owing you money. Try and keep them under 35 days. The best recruitment companies are really, really strict on collecting money, and don't let it blow out. There's some great cash flow financing companies that out there that can really help you. One that springs to mind that I've done some good work with in the past is A Positive, and they can really help advise on collections and finance your cash flow and try and really help you get the cash side of your business really humming, because while profitability is really important, cash flow is the more instantaneous factor that will keep funding your business so you can pay your bills, pay your staff, and keep the company afloat. So a good minimum rule of thumb is to try and have cash in bank equivalent to 3 times your monthly operating expenses. So you need to know what your monthly break even is, how much your total costs are every month, and then make sure that your bank balance equals 3 times minimum what those monthly costs are in case you have a downturn. And an important factor here is, as soon as you see any downturn in your cash position, you know you need to do something sooner rather than later. Don't wait for 3 months until you work out you need to be doing something to reduce your cost base or increase your revenues. Bit of a word here on accounting. Accounting is so important, and obviously bookkeeping is becoming easier and easier with online accounting programs now producing really easy and simple to read statements and reports. You want to have a good bookkeeping function because you really need to know where your business is at any one time. A good accounting package, well, a few clicks of the mouse and you'll know exactly where your business is, because it's all integrated into your recruitment management system, and you should know at any time what your bank balance is, what your costs are looking like, what your revenues are, what your receivables are. Just make sure you really understand the very basics and important contributors here to financial health, because it's so important. You can do everything else about growing clients, increasing revenues, bringing on staff, but if you're not measuring what's happening, then it's going to be very difficult for you to manage the growth and performance of your business. Most recruitment companies I've seen don't have proper budgeting in place. You'll know that more sophisticated, larger companies will always have budgets. They have to. And the reason they have to is there needs to be a level of accountability for costs and revenues, but also so that they know what their cash position is in case they run into trouble and they might lose a big client or there might be an economic downturn. So budgeting, really important, really easy to do these days. Have a look at what happened last year or at certain times of the year so you can see some patterns, and then budget in where you think the business is going. And some people have a realistic budget and a stretch budget. That's something also good to have as well, so you can keep monitoring on a monthly basis at a bare minimum, I believe, weekly cash flow, monthly P&L monitoring is really important here. And to do that, you need a really good bookkeeping or a good bookkeeping service. I've got a good relationship with Digit Pro down in Melbourne. They do a very good job and they're very recruitment specific, and they can help a lot with bookkeeping, or because unless you've got a very busy company with a lot of temps and a lot of contractors, having an in-house bookkeeper can be a big cost for you, and it can be a big risk too. If that person leaves, or if embezzlement is not unheard of these days, you have a lot of risk there if you do have that function in-house. And having just one person controlling it means there's a human risk as well. So reporting, we've talked about reporting, P&L, balance sheet, cash flow, budgets are the 4 key areas to check you're getting good reports. And you need it set up really well, and you need to put the time into getting the right reports. You need to have an accountant that really understands the recruitment industry as well, and not just producing your tax returns at the end of the year. If you've been hanging on to the same suburban accountant that does your personal tax returns for many years, for the same money, there is such good professional accounting firms out there that have good recruitment industry experience and can actually give you advice and not just be reporting on your historical financial position. I've had a good relationship with William Buck over the years. They really understand our industry, and they really take their time to add a lot more value to the accounting process, rather than just presenting and preparing the regular compliance financial reports that are required by law. So they'll add a lot of extra to the advice that they give you. So important to spend the money, and normally it's not much more, to have good quality advisors, which is the last point that I've put there. But also have a look at benchmarks for your business, and know what those benchmarks are, so you can track performance, and share them with your team, and say, look, we really want average consultant performance, for example, to be a minimum of 300K per annum. Break that up to a monthly performance figure, and then it becomes part of the culture of the company, that's what everyone knows, that something like $30,000 a month in billings is the minimum expectation for what you're paying a wage for. And as far as cash flow management goes, I've made this point before in consultant performance, but it's important here to be paying your consultants a salary to be doing the bare minimum, which is a certain amount of revenue and a certain amount of placements, and then commission and bonuses is for performing over and above what your salary, what the salaries that you're paying them is, because otherwise you're double paying, and you're paying commission on top of salaries that are just paid for people to show up. So you really want to encourage extra performance with your commission and bonus structure. Otherwise, your cost of consultants will really blow out, and we'll talk about a couple of benchmarks on that in a minute. So if you see a problem in your financial reporting, the final piece of advice here that I have for you is that you need to make change quickly. And don't wait. If you see something that goes into the red in your financial reports, do something about it right away, because the longer you leave it, the more it will compound as you're going further on and into the future. So here's a bit of a template that I've included in the worksheet for you around setting your financial goals. Here's some critical ones. Work backwards from the profit that you require from the business. What do you want the business to be generating for you and your shareholders or your owners or your partners, and then work backwards from there. And you can look at what your gross profit margin looks like. You can look at your percentage of gross profit for your temp and contract, and make sure that you have some really some good plans in here for the current year, for the next financial year, and for the year after that, so that you really are looking at growth. And growth doesn't need to be in revenue, and I made that point earlier on. It can be in terms of profitability, and that's probably even better, because the more profitable your business is, then obviously the more value it has in the future for succession and exit. So you can look at temp and contract, permanent GP, the number of billers, average them at 300K. You want around about $100,000 profit from each recruitment consultant. So that's about a third of the total cost of them. And where a lot of companies come unstuck is that they pay a $90,000 salary to a recruiter who only bills around 200,000, and that 90K salary plus super plus an allocation of all the other overheads can mean that the actual cost of that person is double their total remuneration package. So if they only bill 200K and their total cost allocation is 200K, then they're not profitable. They're taking up space in your office and taking up management time, which also can be factored in, and the opportunity cost of that management time being spent with better performers and out with clients developing new business, which will help to grow the company. So have a look at that in the worksheet there, and plan out what you're looking to do with your business financially, and that'll feed into your business plan. Okay, now what happens if there's a downturn? And what I've always advised owners of recruitment companies over the years is always have a plan in place in case there is a downturn, because one will come, and we don't ever know how long the cycles are going to be. But we've just as I'm speaking to you now, we've had a very good run, and then COVID-19 hit, and it has created a rather rapid decline in the economy. So if recruitment companies had plans in place to be able to cope with the downturn, then they'll be getting through this current downturn very well, and many of my clients at the moment are weathering the storm quite well. So I've got a 10-point checklist here for you that I'll run through really quickly for preparing for a downturn. Obviously, cut costs really quickly because the longer you leave them, as I mentioned to you before, the more they'll affect your bottom line, and it will mean that you have to find alternative funding to keep the business afloat, and that funding will come out of yours or your shareholders' pockets, and that can be quite detrimental to the business. Look at your marketing. How are you going to maintain relationships during a downturn? What marketing activities have you got in place to constantly stay in contact with clients and candidates in case things go haywire? What sort of client and candidate care programs do you have in place? Have them in place now, not viciously scrabble around when a downturn does occur, because I think it seems insincere that you suddenly give great care to your clients and candidates in a downturn, because they're going to be skeptical you're only doing it because business is really tough. So that should happen at all times, so that when a downturn does come, the limited amount of clients that are recruiting are going to remember your business well, because you've taken care of them during boom times. Staff development, really important. You want performing people in your business. You want to really develop your best people and spend time with your best people. You want to compassionately be exiting non-performers at any time of the economic cycle. And particularly recruiters that haven't performed during really strong times are going to be unlikely to perform during much tougher times. They just won't be able to handle a really tough market, because the skills required are a lot stronger in a tougher market, and a lot more sales and marketing skills are required in a tougher market to generate business from a much smaller pool of job requirements. You can add low-cost resourcing. I've been a very big supporter of low-cost resourcing. Instead of adding consultants to grow your business, to support the ones that you've already got, for them to be able to bill more. And to do that, you can give them admin and resourcing support, and increase their targets, of course, so that the cost of that is taken into account, but give them resourcing support so that they can spend more time in front of clients and candidates, where all that magic happens. Now, that resourcing support can be onshore, and you've heard from me that I'm a much bigger supporter of offshore resourcing, just particularly for this job, because there are people that are much better and more dedicated to resourcing, I believe, offshore, that are very skilled and experienced in it, and much more reliable, and of course lower cost than some of the locals that we turn over in the recruitment industry here domestically. So look out for locking into high rents. Companies that sign long-term, very expensive A-class building rents are obviously caught really short when the market turns down, and it's a very difficult cost to cut when you've locked into longer-term rents. So flexibility on offices, and the ability for some staff to work remotely is the new trend, as we've discussed before, and I think it's really come to the forefront when we do have a big downturn on how important it is not to have inflexible, very expensive office accommodation. So just a couple more factors to cover for planning for a downturn. Make sure your client base is good quality. You're dealing with good quality clients. You're working on good quality work that is predominantly exclusive and or retained. You've got a good, strong diversification of revenues, and this helps at all times as well. You don't want reliance on any single client or a small group of clients or in any one particular industry sector that may be hit hard by a downturn, just as you don't want reliance on single individuals in your business as well. Diversification is so important when things go wrong. And finally, planning for a downturn, strong leadership and good communication always work really well. And we're going to be covering leadership and communication in the next session. Okay, quick comment here on insurances. It doesn't really fit into finance, but I believe insurance is really important. It's one of those necessary evils, and every time we pay premiums, no matter what sort of insurance it's for, we feel like we are ripped off, because when either we never make claims, or when we do make claims, the insurance companies always try and fight us and will do anything they can to try and get out of paying. But I think insurance is a good preventative measure. Obviously, you need workers' compensation insurance for your staff and for your temps or contractors. That's mandatory, and it's the law. But in terms of other insurances, most big companies won't deal with recruitment companies unless they have decent insurances in place, like professional indemnity and public liability insurance. I've never been a big fan of business interruption insurance or other more specialist insurances, because I think if you've got professional indemnity insurance and someone does, and it will happen over the years, someone will try and have a go at you legally, just to be able to say, look, you know, go your hardest. I've got $2 million worth of professional indemnity insurance, so I'll have a lot of support. And if you do have a go for something that really has no legs, then you'll be up for paying my legal costs as well. So I think it's a good a preventative measure, a security blanket around operating, because especially when you've got a larger business with lots of staff, you can't really control what each of those staff are doing out there in the marketplace. So that those minimum levels of insurance are important, and if you speak to or do some research on what are the most important, then you can, I guess, sleep much better at night knowing that you've got some level of protection if something goes wrong. And we're dealing with human beings all the time, so there's bound to be something that'll happen along the journey. Okay, and here is something that's quite special that I've just developed recently, and this is a snapshot of a special spreadsheet calculator that I've done. I really wanted to get a handle on what the ultimate recruitment company looks like, and from a financial basis, of course. How do you build the most profitable recruitment company? What sort of benchmarks are important? How do you backward plan if you're looking for a certain level of profitability? What's the ideal staffing level? And I put this into a calculator that will help you input you can see here on screen, say you are looking for a desired net profit of $1 million and an average consultant billings of 300,000. And then the average total remuneration package per consultant, this is the average, so you'll have some that are higher, some are lower. And that calculates your average net profit margin, which is 35%, which I believe is a very good goal to have. And you'll see down the bottom there that you will require 9.5 consultants, let's say 10 consultants that are billing 300K at that sort of profit margin to generate your $1 million profit. So if you've got 10 consultants and you don't have $1 million profit, then you can go back to what I was saying before and look at your cost base, and most importantly, look at your consultant performance. And just on team size, and we'll talk a little bit about this in the final module, but it's good to have smaller teams that are very well led and well managed rather than larger teams. that are not performing very well, not communicating well with each other, and size is really not an indicator, as you've probably heard from me in terms of total revenue and total staff. It's not important. It's about the profitability of each of your teams, each of your divisions, and the company overall. All right, final word on financial management. Just to summarise here, the most important financial measures are profit and cash flow. If you just keep that in your mind, profitability is so important, and cash flow to be able to pay your bills, pay your staff, pay your financial obligations, and to be able to sleep well at night are the two critical financial measures to look at when you're running a growing recruitment company. So I hope you enjoyed that session. I hope there were some good ideas for you. I hope I filled some gaps in how you're currently operating, and also gave you the confidence to really get a handle on the financial aspects of your business and get really good quality advisors that are adding value in terms of good advice on how you can continuously improve your business. And without good financial reporting and good financial measures in place, it's really difficult to know what you can do to change to do even better. So hope you enjoyed it, and I look forward to seeing you at the next session. Don't forget to complete your worksheet and review the articles or any other additional materials that are included in this session. Thank you.